Hello, Warriors. Sinatra, Arena, how are you? Use your umbrella, Hugo. Alexander, what's happening? How are you? NG, Gorkum. Okay, let's take a look around here. Hi, Jeff. So there's that inverse. What's up is
Oh,
Bitcoin.
Dale, we
We're,
can't see your screen. Sorry. Good morning.
oh, thanks, buddy. All
No
right,
worries, man.
so I appreciate it still. How about now? Everything up?
Yep, all good, man.
Okay, so I actually thought I'd have another shot to sell the gold up here at 1921. I don't know if it's going to happen now. Maybe if we have another week's surprise and the dollar gets smashed, that could happen. Um, but what I want to know, and someone still hasn't been able to explain it to me, is the inverse relationship between gold and Bitcoin. You know, I've been mentioning it, and it's as plain as day. I don't think it's coincidence anymore. Gold down 15 bucks and uh, Bitcoin up 1200 right now. So I still have no idea why it happens. Maybe I don't even have to know why. All I have to know is that I notice it and kind of play it that way. Um, Something else going on here. That to me is very interesting anyway. And we took out the 4185 level in S&Ps, and we're not that far away from a 2 week reversal. 4160 will do it. So, you know, everything's going to hang on the NFP tomorrow. Um, my buddy Jim Welsh thinks there could be one more surprise of weak numbers. I think they're looking for about 600,000. Is that what you're hearing, guys,
Yep,
for tomorrow?
yep.
So, you know, anything underneath it or dramatically probably sends a dollar lower, and we'll see what happens if the S&Ps will say, well, yeah, the Fed, you know, more stimulus and you know, more stagflation. Okay, I knew Ziggy would have an okay, would have an answer. Simple, Dale. When gold is dropped on your foot, it hurts. When you drop Bitcoin on your foot, you feel nothing. Okay, so that's why there's all right, I guess that's the inverse relationship explained by our stalwart member, Ziggy. Taking a look at oil, which, you know, is our guest, who was right about oil for several interviews now. Anas El Haji will be with us today at the bottom of the hour. And he talks about how OPEC manages the market. And, you know, if you're managing a product that you sell that's a majority of your country's income, yeah. So Anas, it's going to be interesting to talk to him after
Hey,
this
hey, hey,
advance. Yeah,
Dale.
yeah, buddy.
Hey, since you're talking to Anas, there was some headlines out overnight, which it's interesting. We were just having this chat in the chat room about Russia's finance minister Sulanov says national wealth fund to exit U.S. dollar assets will invest, euro 40%, won 30%, 20% gold assets instead. And the reason why I'm bringing this up is because I said, well, the last time that you had some rumblings from Russia was regarding them not doing energy transactions in
Dollars.
U.S. dollars, and we're going to convert more to to yuan or
Right.
renminbi or whatever, and not use the U.S. dollar as a primary transaction vehicle, if you will. So,
Okay.
I wonder if you end up talking to them about like, you know,
What's the effect of that? And
yeah, this was years ago though, but it's like, are we seeing that still where, you know, um, all of these energy transactions, trying to do them outside of, trying to make the US dollar less of a reserve currency is what
Yeah,
I guess what
lots
I'm
of a
trying
petro currency. And something to keep in mind that President Biden, I think, meets with him on the 16th. And Putin keeps punching Biden in the nose with hacks and everything else going into the meeting. In fact, I heard that Putin is going to raise the question of why we're persecuting people expressing their free speech by invading the Capitol. He's very upset that we're, giving those people a hard time. Nothing about Navalny or anything. There's a lot of tension, Blake. I think there was even a huge Air Force mission over Russia sometime this week. And, you know, uh, it's going to be real interesting to see. But, Russia's not doing anything about these criminal organizations. They're saying they are. Who knows if they're, Russia's secret, like their version of the CIA, but they're saying they're criminals that are making all
Interesting.
these hacks. I mean, they're going to screw up our barbecue season. I mean, what kind of summer is this? We can't get hotel rooms.
BS,
Uh,
man.
yeah, steaks, because of that hack, 20% of our meat supply is disrupted. You can't take a ferry over to somewhere, Cape Cod. And who knows what else they're going to do. I mean, one thing I've worried about for a long time is, if these guys really want to hurt us, any of our adversaries, and Russia has done this before, like to Ukraine, where they've shut down the grid. So this is really a pivotal meeting, and it could be a war or peace type of thing.
Yeah,
But
I think those are the geopolitical risks that are obviously
maybe
around.
that's what the S&Ps are worried about here today, and the
Yeah,
dollar's up a little bit. What
but
do you think?
I hear what you're saying. But one of the things that actually I was just reading in the Traders Summit website, guys. If you're not reading here, I was just reading Mark Chandler's piece, and we were talking about the one of the Fed's credit facilities that was not used a whole lot. We were talking about this yesterday in the chat room last night, and I said, "Hey, there's the Fed here. Let me see if I can get the headline for you guys. Well, not the headline. I'm going to get the Fed. Shoot, where did I just had it? Hold on. The SMCCF. That's what I wanted.
Funding facility, or
it's one of their facilities that the Fed used, or actually ended up not using during the post-pandemic crisis. It was more of the Fed put this facility in place, and it's like, okay, it's in place, but it didn't get used that much. But it's like kind of like one of those backstops where. Yeah. Let me see if I'm still trying to find the article really quick. I didn't actually expect to talk about this, but since we're talking about equity weakness and talking what Mark Chandler was referencing here, and Mark said it shouldn't be looked as here it is. It shouldn't be looked as a more of a technical adjustment, not like they're tapering. I agree with what he's saying. And because Dudley, the Fed's Dudley was just out there saying the same thing, like, hey, don't look at this as tapering. In other words, he's got the Fed governors running around today saying, hey, don't look at what we're doing, just hear what we're saying, right?
Yeah.
Like, look over here. What were the Kabuki theater going on right now, right?
Yeah.
So the Fed is actually removing this system. And as Mark Chandler just said here, on Traders Summit, that Fed's corporate bond divestment is not a policy signal. This is like what they're saying is, hey, don't worry about this. It's not really a big deal. But you know what it is? The Fed is actually removing some of these backstops. It's kind of like, your guard is up, defensively, and then you let your guard down a little bit more. It's the Fed has not started tapering. The Fed is not, but they're starting to remove some of these programs that were in place following the pandemic response. So that's something to think about. And I don't know if that's what's causing the stock market reaction today. But last night, I said, don't be surprised if equities come under a little bit of pressure because of this under the radar news that no one's really talking about. And like I said, I can't put my finger on it. And maybe it's, as you pointed out, maybe it's, some of the people thinking ahead of what's happening with Russia, but we are attacking, the lows of the week right now.
Yeah.
And
took out that important support line it held 3 times last week.
Yeah. I mean, this is resistance, right? Turn support. And we're breaking below it. And so you got to respect that. Now, I'm not going to sit here and say, oh, it's over. The market, it's over. We're going much lower from here. But what we are doing is we're carving out a lower high, and that we have to be respectful of, right?
Yeah, a bag holders opening that was Tuesday.
Oh, right here?
We were up 34, when we came in up 34.
And look, this is a head and shoulder pattern. So let's look at it from well, how far can we actually go in the S&P? Because I don't want to sit here and go, oh, lower highs, we're breaking 4,000, and the S&P is going back down to 3,000 after that. So just in case you guys weren't wondering what's going to happen with the market, that's what's going to happen. That's not what I'm saying here. We have a little head and shoulder pattern, and the head and shoulder pattern should probably play out to this trend line right here. So we might see a move back down to 4130, 4140. And if for some reason we get down there ahead of tomorrow's jobs report, I mean, dude, why not be a buyer there? I mean, because your risk, right? It's like, okay, well, I'll just buy the S&P once it drops down to 131 or 141.30 and look to be a buyer there, because if the jobs report continues to be strong, or let's just say it doesn't. Let's say the job Stelios just confirmed.
Yeah, Jim's looking for another weak surprise.
Yeah, so let's say we get a weak surprise. Let's say we create 400,000 jobs, but well below the 650 or whatever the market's looking for right now. Fantastic. Equities are going to rally to highs. So what? Oh, we better put that post-pandemic whatchamacallit back in place, right? So, I wouldn't worry about it if it's a relatively weak number. Great, the markets are going to love it. What the markets wouldn't like, Dale, and I think would scare the crap out of the markets, is if we didn't create any jobs last month. Now, we have ADP numbers coming out in 2 minutes, right? So because we have ADP coming out in two minutes, maybe that'll give us a better indication of what we're looking for. So Stelios, good morning. How are you?
Good morning. I'm very well. I wanted to add something to what you said.
Yeah.
The markets with this new normal, why are they grinding for years? I think the main reason is low yields, or and low rates. So I think economic data either way are not going to be, unfortunately, they're not moving the needle enough. The thing I'm looking at is yields, and if we start seeing yields continuing higher, then I think that's going to be the trigger. So I agree with you. Good numbers, yeah, okay. It's not going to do much. Bad numbers, oh my God, buy stocks.
Yeah,
so,
right.
Yeah.
So I think yields are going to be the key, and that's probably why the Fed and the other central banks are fighting and buying everything they can to keep things low, so that the party can keep going. I mean, I don't know what to say. It's very difficult, but that's my view.
I was chatting with another trader privately. Some of you guys know who North Hero Trading is. North Hero. Yep. He's on Twitter. Anyway, he's a guy I never met in person. I was supposed to meet him when he came out here for the golf tournament.
Like, hold on a second. We have ADP now.
Shoot,
yep.
Sorry.
Now.
Sorry, I needed this.
Let's see. Oh, big beat, 978.
Okay. So, actually, that's interesting. I wonder if stocks will feel that a little pressure. What is that? I didn't want that.
A little bit. The dollar euro's coming off on this.
Yeah, dollar strengthening. Wow.
And yields are popping a little bit. 1.60 bips. Still need to get through 170.
Let's see if the dollar's going to strengthen a little bit more. Look at the Aussies coming under a little bit of pressure. Remember, all this is just in ranges. Like I'd expect the dollar Canadian to come up to 121 maybe. By the way, I bought dollar Canadian yesterday, and then I sold it this morning as it was up here. Yeah, and then I shorted a little bit just a little while ago as a hedge to my my Canadian yen short. But I just closed that because I don't want to be in this thing if it rips up to 121. So
who knows if you want to have any currency position going into the NFP?
Yeah, going into tomorrow, I'm like I'd rather not have dollar exposure, right? So anyway, going back into our conversation, Stelios, about hold on one second. Going back into our conversations about what's going to move the needle. I was talking to North Hero Trading, like I was just saying, and him and I were talking privately, and he's like, "Man, you have to give the Fed some credit here. They've done a great job." And they've managed to keep the markets very stable throughout and keep them stronger and confidence up throughout this entire situation. The question is going to be, how do they exit this without stirring up the market? Remember the taper tantrum. This is all going to be the same. So
VIX flirting with a very important pivot once again, the 19 level. Closes above that are going to look pretty good. Every time it's above it, you get a pop, and underneath it, I thought we'd have one more shot down towards 15. It's a 2 drive on the 2 and 4 hour, but we close up here. It's pretty good. It's a buy signal to me.
Yeah, I mean, it's like okay, well, the market is, it's starting to feel a little bit of risk off, right? Gravity. There's no
Isaac Newton. They're thinking about the apple falling from the tree.
So Marco wanted to take a look at the dollar Swiss really quick. I'm going to give you my analysis of the dollar Swiss. It's been really the same for the last 2 weeks. As long as we're below the 200-day moving average, you don't even look at it if you're thinking about buying it. And if you're not short already, we've been targeting down here at this is the previous neckline. Like that was the previous neckline. We knew that was going to be support a couple weeks ago, and I'd always thought that we're going to drop back down to 78% retracement just below this support down here at 89.11. It just never reached for it. It stopped like 20 pips ahead of that. And so I guess what I'm trying to say, Marco, is while you're here, there's zero to do. And it is one of those situations, though, if we do see, which, Stelios would probably agree here, if we do see, a move in yields and yields start to break out higher, this is the one currency pair I would actually be on the lookout to be long, is the dollar Swiss, if that started to happen. So now, since we're talking a little bit about how's the Fed going to exit this post-pandemic policy that they have, we have to, I'm gonna ask Steve, since Steve is probably here. Steve, are you here?
Oh yeah, I am, of course.
Hey, good morning. So how's the Fed going to do this without disrupting the market? I mean, when you have
They won't.
they what?
They won't. It's a very
Well-
simple answer. And how do we know that? Because every single time they've come close to the time that they're supposed to unravel all this, they've miserably failed. If you remember, the plan supposedly back in 2008 was that this was not debt monetization. It was a very temporary solution to an imminent problem, that once the problem went away, we would bring the balance sheet back to normal, reverse all the emergency policies, as they were called, and everything would be, a-okay. Several attempts to make attempts have been made all these years. And I think what they learned is that this is a one-way street, which is impossible to walk in the opposite direction. So they will keep on doing what they're doing until things implode. That's what I believe.
Okay. You know what? I am going to agree with you. And I'm going to say, okay, Steve, let's talk about. Oh, shoot, that's not going to. Hold on. I was going to say, let's talk about that. Let's say that the Fed will never be able to exit. So you could go back and say, well, Steve, that's crazy. That the Fed would be zero, would be, zero rates at for infinity and beyond. How's that even going to happen? But hasn't Japan done that?
Yeah, they have. Although I've explained in the past why, in my opinion, unfortunately, the US is not comparable to Japan. There are some similarities looking at monetary policy and the path, but at the same time, there are clear, obvious differences and big ones.
Of course, you cannot look at apples to oranges, right?
Mm-hmm. Yeah.
You can't compare apples to oranges. You would say that Japan's economy is different, than the U.S. economy, and of course it is. But we can't ignore the fact that Japanese stocks were rallying aggressively, and I'm trying to pull up a long-term Nikkei chart.
Dating back to the 89 top, I assume.
Yeah. Going back to 19. But I want to get out of futures. This is what I'm trying to do. I'm trying to find if a CFD.
I doubt you'll find a CFD with that type of history, to be honest.
I found it before. That's why.
Okay.
I have found it before, but well, here we go. This is a CFD, and this would be a decent example. Mm-hmm. So this is Japan back in the.
Did we lose Blake, guys, or is it me?
Oh, he's there.
Oh no, I actually lost internet for a moment. Can you guys hear me?
Yeah. Because I did hear some kind of a lag. That's why I asked.
Sorry, it's back now. But what I was trying to say is, dollar Canadian's ripping, is that that we're at these levels back in the late 80s when we peaked, and we've never seen that again, right?
Yes.
So at what point did the market realize that Japan is going to be zero bound forever, or for the next 30 years?
I think quite a long time ago, the market realized that there is no, imminent, exit strategy from this type of monetary policy.
I bet it was somewhere in the late 80s.
In the late 90s, you mean, probably.
Well, was it? I don't know. I'd have to go back and look.
Yeah, it takes some time to sink in, right? Because initially, always, monetary authorities always start any type of policy with the temporary emergency prescription until it's been so long that then nobody believes that it's temporary, and the market settles with the idea.
Yeah, I agree. So, though, anyway, it's one of those things that I look at, Japan, and and again, it's not apples to apples for sure. There's so many reasons why things are different, but we can't ignore the fact that we may have rates at zero forever, and markets at some point would become numb to the idea of rates being at zero and realize that the growth is never going to really pick up. So anyway,
and if we wanted to compare these two cases, we can clearly see that oppositely from the US so far, the Japanese stock market had a huge leg lower and remained at very depressed levels for many, many, many years. And even after the quote unquote recent rally, I say recent because in essence, they've been in rallying mode for like, what is it now, 8-9 years, something like that.
Yeah.
We're still some distance away from the high in nominal terms. But if we want to make it in real terms, with so many years having passed, more than 30 years, so if we adjust it for real terms, we're still very far away from the highs.
Yeah, and I 100% agree. This is like you adjust it for inflation and everything and everything else. You're right. This was probably one of the best trades, and a lot of you guys were with me during the webinars when this is when Abe announced the 3-arrow approach
policy. Yeah,
right here, and this is where the dollar yen took off from. I want to say it was 9th right here. Yeah, I guess it was right there at the.
Oh, speaking of which, Blake, since you mentioned it, imagine if you're a foreign investor in Japanese stocks. So if we want to measure the Nikkei in dollar terms, for example, right, or euro terms, you understand how far away we are from the high, right?
Right.
Because big part of this move higher, as you just explained, is also due to the yen being, disintegrating for several years. We moved from like 70 little to, what is it, 120 we went, whatever it was.
Yeah. It's something else to think about. So anyway, it's going to be really interesting to see if the Fed will ever be able to remove this, if rates are ever going to be able to go up again it'll be interesting.
The biggest problem, Blake, is that the next time rates go up, it's not going to be due to choice. It's going to be forced. And you know very well that if something is to happen, you'd rather plan for it and make it by choice, even if it's painful, than have it being forced upon you. And I'm afraid that inescapably, the latter is what's going to happen.
Yeah, right. Hey, I want to leave you guys with one last thing. The euro is at triangle support. We've been talking about this triangle support for a long time. Here in the, for those of us from, the Forex Analytics webinars, especially during the daily roundup and during the morning edge here coming up. This is really important support. We have also channel support just below at 121.40. But if we're forming this triangle ahead of the non-farm payrolls, you don't want to be too aggressive right here, because remember, we have non-farm payroll tomorrow, and if the jobs report, if it is strong, the dollar will respond well. If it's a weaker number or even in line, you're going to see stocks move to highs, and you're probably going to see the dollar weaken as a result. So just keep in mind that the big data is going to be out tomorrow. We have ISM here in about I think in about an hour and a half. So stay tuned. I'll see you guys in the chat room for that. But stay tuned for the interview with Dale coming up. So.
Anas, are you in the house? I don't see you.
Who do we have, Dale, so I can look for him?
Anas El Haji.
Let me see. I don't see him. I do see two people connected through phone call. Yeah.
Yeah.
So, there's no way to know if it's one of the two of them.
I sent him a message on Twitter.
Yeah. So if it's one of the...
No, I just got a response, so he should be coming in now.
Okay, good. So how have you been, by the way?
Good.
Did you buy enough AMC yesterday?
I just, these things, it should be illegal to be able to make money that fast. I don't know.
It's definitely unhealthy.
Well, and not if you're doing it. So maybe there's a little envy there, but compared to the way I have to make money in the market, it's amazing that.
But the way you make money in the markets, you are at your age and still in the markets. The way they make money in the markets, in a few months, the vast majority of them are not going to be ever again in the markets.
Or they'll be, okay, or they'll, if they're younger, they'll become older after that. So here, Nas is having trouble. They'll become my age after that.
In a couple of weeks, right?
Yeah.
They look your age within a year.
Okay.
So we're still waiting
trying
for
to get in here. See if this works.
Okay.
So, Steve, have you figured out the inverse relationship and why it's happening? Gold down, Bitcoin up, Bitcoin down.
It's very
gold
simple
up.
because one of them is a store of value and the other one isn't.
Huh. But has it always been this way? I mean, historically?
It has always been that way, having to do with reality. It hasn't
well,
always
I'm
been
talking about,
the way of trading.
where you would see it on your screen that, they were inverse. Because I never noticed it till I saw, Jim writing about it. So
the thing is that one thing they were right about having to do with cryptos is you remember the era that they were touting cryptos as a very positive thing because they were uncorrelated with everything. You remember that era, right?
Right.
So in a sense, that was a good point. Why? Because the rhetoric is changing so frequently that correlations keep jumping all over the board. So there was the time that some people believed that, they're very similar to gold. So the correlation was positive. There are now, we've now seen, the latest period, for example, during May, gold was up like 7-8%. Bitcoin, for example, was down 40%.
Okay.
So,
Anas is
good.
in the house. Welcome back, Anas. How are you?
Enjoy the interview, Dale.
Okay.
We'll see
Waiting to
everybody
hear
else
you.
in 42 minutes.
Yeah. Hello, Anas. Welcome back to Face. There you go. Your screen sharing. Waiting to hear you. Oh, look at this. A PowerPoint by Anas El Haji.
He's still muted.
Please unmute, Anas.
I did.
Anas, how are you, buddy? Welcome back.
Thank you. Thank you.
Did you like my comparison that you've been calling the oil market like Nostradamus?
Well,
you know who he is,
I
right?
wish I was paid for it.
Anyway, you're known for saying that OPEC manages the oil market. What great managers they are. And prices, ascended to levels you talked about quite some time ago. So
absolutely. And the writings were on the wall. As you know, timing was always difficult. I believe that prices went up earlier than expectation. But in terms of trend, I think they were on the mark.
Okay. All right. So what do you have for us today? The IEA scenario?
Well, I thought about what to talk about today, and I thought to talk about some points that no one is talking about.
Right.
So I created 8 bullet points. I will talk about them briefly each,
Okay.
and I think people are going to like that.
Okay.
The first one about the IEA scenario that caused shockwaves, and the media covered it widely, that we don't need oil and gas by 2050 if we want to reach carbon neutrality with temperature not rising above 1.5 degrees. And the comment on that no one asked was, okay, we have all those countries that already announced the year that they are going to achieve carbon neutrality. We have companies that already announced that they are going to be carbon neutral by a certain year, like 2040, 2030, whatever. If all of them announce that and they know where they are going, then why the IEA is creating this scenario to help them out?
Okay.
That means everyone made the announcement without knowing how to get there, how to pay for it, and who is going to pay for it.
Yeah,
So the
just
importance
words.
of the,
Big
exactly.
difference between making a statement and executing.
So the importance of the scenario is it proves that all those announcements basically were made without knowing how to get there. And the IEA itself has said created the scenario because it was asked by the governments how to achieve it because they did not know. So this is really a big thing here. I mean, regardless of the scenario and what Prince Abdulaziz bin Salman, the energy minister of Saudi Arabia, and he said this is from La La Land and all that stuff. Regardless of the details, the importance of it is it proves the point that those countries and companies have no clue when they made those announcements. And this is very significant for the oil market. Because if all of them are going to say that and they are not going to invest and demand is going to continue going up, then prices are going to continue going up.
Right. There's no investing on drilling anywhere here
Well,
in the US
that brings
anymore.
us to the second point on the investors' revolt on, as we all heard about ExxonMobil, Chevron, and Total. So what those investors want? Now, let's state the fact that Engine 1 was a proxy for way bigger companies. And the media went crazy on small investor. And no, it wasn't small investor. It was a proxy for some really big investors. So what they want? The irony is they want ExxonMobil and Chevron to invest in profitable oil.
Right.
Which means that probably good news for small companies because we might end up with Exxon and Chevron divesting from shale. But we will see how that's going to play. But the most important, just like the EIA scenario and what the main point out of it, we have the same thing here. What is the main point out of the investors' revolt? Supposedly that they want a cleaner energy. They want those companies to invest in everything that take us to carbon neutral world, etc. Well, that proves a very important point. Environmentalists always cheered the funds and the investors who divested from oil and gas.
Right.
Well,
until they drive to the gas station.
Well, but the main idea here is you cannot have it both ways. What happened at Chevron, ExxonMobil, and Total proves the idea that divestment was a mistake. If you want to make a change, you stay at the table. If you are not at the table, you have no voice. So those who stayed at the table had more impact than those who divested. And now oil and gas prices mostly oil is going to go up, and we probably will have really a good run. Those who divested are going to miss on that. But those who did not, who stayed, are going to make really good money.
I have a question from an attendee from Nirvan Mehershan, Mr. Alhaji, respectively. When do the IEA, EIA, OPEC demand scenarios expect OPEC plus spare capacity to be exhausted?
Okay. Based on those scenarios right now, it's not going to be exhausted because all of them think that demand is going to decline, and therefore we don't need that oil anyway.
Okay.
We, on the other side, who believe
Yeah.
that demand is going to grow, who believe that this demand is going to be, the spare capacity is going to be exhausted, and prices are going to go through the roof.
Right.
So for
And
them,
I know a
it's
lot
not-
of smart people that go with B right here on us. Really. I mean, people that weren't really constructive on oil months ago when it was out of favor. You're very
Absolutely.
welcome, Nirvan. And now they're jumping on it. You know, they're saying, you know, guys like Tom Lee on CNBC, who, you know, has made some very good forecasts. You know, he's saying, you know, that oil is a hodl almost, you know, which is a crypto term. But he's saying for at least 3 years, and that it's going to would have a major positive impact.
Well, the
on
third point
portfolios.
is going to focus on a point that no one else is focusing on. And this is very important. I tweeted about that yesterday.
Okay.
I think that's the third point. What people are missing is we have this massive drought in several areas around the world, especially in Brazil and Western United States. But we have all this chip shortage and all this stuff too because of that. But let's focus on this because people do not understand what it means to oil. If you look at a country like Brazil, they switched to flex fuel or ethanol since the 70s. And most of their cars run on flex fuel with a lot of ethanol.
Okay.
So we have a major drought, and drought affect the production of sugar
Of
cane,
corn. Yeah.
and therefore ethanol production declines. And here we ended up with two problems. The first one is ethanol
Less
prices
food.
at a record high.
Yeah.
And the second one is now ethanol has to compete with sugar. So whoever has the sweet tooth and is going to pay more for sugar, we are going to see divergence to sugar at the expense of ethanol.
And corn too. I mean, corn prices have almost tripled.
Yes.
On us in the last year.
Yes. So what's happened is,
go ahead.
We have people in Brazil right now calling on the government to relax the requirements for ethanol so they can use more gasoline. And Brazil does not have that extra gasoline. It has to import it. And that's not counted in any outlook.
Like they don't have enough problems. Brazil.
Absolutely. Absolutely.
No.
So that gasoline is not counted in any outlook. That's more bullish now. But we have even more bullish news. Because of the drought, water levels in the dams in Brazil are very low. And therefore, the hydroelectric production is declining, which leads to power shortages. How to compensate for that? The only way you can compensate for it is to use either diesel or fuel oil. That does not exist, and Brazil has to import it. But if you look worldwide, when we have power shortages, we have something that analysts always missed, and that's private generation. People and companies and factories resort to private generation, and private generation mostly uses diesel. So all of a sudden, and mark my words for this, diesel consumption in Brazil is going to skyrocket. That's another bullish sign.
Okay. How about here in the U.S.? How about more?
This is we need a whole show on this because
okay, all right.
California cannot go on with all its policies while it's going to experience those shortages year after year after year.
Okay.
Last year, we've seen the federal government bringing some I forgot whether it was the Navy or the military, large diesel generators to help California.
Huh. Okay. Well, I hope I hope the utilities stay on this summer. It's pretty hot where I moved to.
And this is another issue. I think you are raising a very important issue. If we end up, and I tweeted about this yesterday too, if we are going to end up with a hot summer, here are the kind of the results of the main scenario. People always look at the Arabian Gulf states, because if we have a very hot summer, then they use a lot of fuel oil in their power generation, and their exports, net exports decline. And that kind of another piece of the bullish news.
Okay.
The issue here is because of COVID and because of various reasons, this may not happen this year, but we are going to see a run on jet fuel. Jet fuel in the region is going to skyrocket if we have a hot summer.
Why? Because people are going to want to get out of hot areas and
Yes.
travel out of it?
Especially after COVID, because they've been already stranded for more than a year. If we are going to end up in a hot summer in Europe, as I mentioned in the tweet, God help the Europeans, because there is no other solution just to handle. I mean, I don't know really. They are going to have serious problems. The reason why you end up with hot weather, because the wind is not blowing. And if the wind is not blowing, then wind power is not going to help.
Yeah.
The other issue is if we end up with a hot weather in Texas and California, we are going to end up with blackouts.
Okay.
And
This
these
year.
are all serious. Yes, right now in this summer.
Okay. All right.
The fourth point is the U.S. Oil imports from Iran. This was all over the news for about a day or two on the Biden administration importing oil from Iran. People do not know that it was a website, a pro-Trump website with suspected links to the Russians that brought up the story. And when people were interested in it, all of a sudden, other major news agencies started getting the same exact story without investigating it.
Okay. Misinformation then, right?
Well, the Biden administration did not import oil from Iran. It was confiscated oil from an oil tanker in the Arabian Sea that the Trump administration confiscated, but the whole legal procedure did not finish until Biden took over.
Okay.
So it
All
wasn't.
right. You know, you
from
brought
Iran.
up Russia. I have to just sidetrack you a little bit.
Well, Russia, because the website being accused always of being related to Russia. The website that brought up the story.
Russia made an announcement of what kind of currency mix they're going to accept for payment of oil. Taking dollars, less dollars, more yuan, more euro. Any impact?
Well,
on the dollar?
It is the same story. I think we had this discussion a couple of shows ago.
It's been going on for years, trying to de-dollarize.
Correct.
Take the petro currency status away from the dollar.
Oil will remain priced in dollar no matter what. Okay. And we have to separate pricing from revenues.
There you go, Blake.
Okay. So we have to separate pricing from revenues. So what they are asking for is to get the revenues. And that will have an impact in terms of quantities, etc., traded in the market, but oil will remain priced in dollar.
Okay. Got it.
The other points quickly, I don't know how much time we have left here.
10 minutes.
Okay, that's good. On the return of Iranian oil, there is all kind of misunderstanding among analysts and the media about the return of Iranian oil if the sanctions are lifted. The question is, what is the impact on the market when? The other question is, okay, if they increase production, will Iran get an OPEC quota because they don't have it now? And the big misunderstanding of this, everything Iran can export is already in the market. And that confiscated oil that the Trump administration confiscated and reached the United States and sold in March proves that point. That oil is already in the market. So if Biden lifts the sanctions tomorrow, we are not going to see a flood of oil from Iran. It takes months to see any meaningful increase from there. That's another bullish sign. But we have one problem. We have some floating storage, and the estimate is probably about 70 to 110 million barrels that could be released at any time if there is a market for it. Well, here we have a major problem because we have crude and we have condensates. Usually, OPEC define condensates as everything that is above 50 API. And most of that is condensates, is not crude. But the Iranians would love to kind of lump sum all of that to show a larger number of exports anyway. As for OPEC and the quota, OPEC is very clear on this, that they will assign quota to Libya and Venezuela and Iran, not Venezuela, probably later on for Venezuela, but Venezuela is in the mix anyway. If they go back to the 2016 production level. So once their production increases until it reaches 2016 level, then they will assign them quota. Then after that, will they obey for it, buy it or not? That's a different story. But again, that issue of condensates versus crude is going to mess up the numbers. In addition, all those numbers in the media are different numbers and they are not credible at all. Whatever number you read in the media, Iranian exports is larger. That's the rule of thumb in this case for me. I think point number 6 is going to be very exciting for a lot of people. And if you don't mind going to my Twitter feed, Anas Al-Haji, because it is the pinned thread.
Pinned tweet?
Yes, it is a thread on the sweet spot for oil. And on the sweet spot, what is the sweet spot and what is hit and run? These are the two main points here. I always been fascinated by trying to find out what is the optimal price of oil from consumers and producers' point of view. Something that makes both sides happy. And I've been doing this work for a very long time. And I call that the sweet spot. The sweet spot right now, we are already in it. If you look at the forward curve for the next 10 to 12 months, we are already in it. It's about 68 to 75 for Brent. Okay. Anything above 75 is the sour spot. Anything below 68 is the bitter spot. Now, those numbers, rounded numbers just for talking points, but actually in the model, they are not rounded numbers, of course. But the issue here is with all the IEA pressure and the scenario and all the climate change policies coming out of Europe and the Biden administration, there is a real fear that while OPEC Plus is enjoying this and the consumers are enjoying this level because it leads to stability over long term, they are enjoying this, it might force a hit and run scenario. A hit and run scenario basically is, instead of OPEC Plus trying to keep prices below 75, that they are going to let prices run to whatever price they can get, whatever that price is, take all that money and run away. That's the hit and run scenario. So what I'm saying here is the Biden administration and the Europeans and the IEA probably are forcing this hit and run, which means that prices can skyrocket and destroy the world economy just because of their extreme actions on climate change.
Okay, and right, and also, doesn't that really serve the environmentalists and the green movement? 100 plus oil, where everyone will want to make the conversion?
I am glad you made that point because they are missing a very important point. Now, a climate change expert cannot be an oil expert, and that's why they are missing the point.
Well, I'm not even talking about experts. If I'm used to paying $3-4 a gallon, and I'm paying 7 and 8. I'm going to more seriously look at an EV than a
But
combustible
hold on just a
engine.
second. There is a problem here. Let me explain it. We have enough evidence throughout the years to show that the oil business and every competitor, every energy source, they share the same basic materials. And we have enough evidence to show when oil prices go up, the demand for materials for the oil sector, especially steel for pipelines, for rigs, etc., and every copper and everything else, goes through the roof. And the oil industry is the only one that has the cash without any government support to buy these things. So the oil industry is going to dominate in buying these things, although they are expensive. But other sources, whether wind or solar or the EVs and everyone else, want the same material. So the cost goes up for everyone. It's not only for oil and then the others will stay low.
Right. Okay.
And we have enough evidence. For example, look at 2007, 2008. Oil prices went to about above 120, and as you know, that they reached 147 for a short
10
period.
minutes. Yeah.
We did not see a switch. Why? Because the cost of everything went through the roof. And then we have the experience 2011 to 2014. We did not see a switch. The cost of everything went through the roof.
Did you know that there's an explosion at the oil refineries in Iran? That I believe, is this news? Is this breaking?
Yeah, yes, this happened yesterday.
Okay.
And there are two theories on that. The first theory is it's either the U.S. and Israel and others are causing those explosions in various ways. And the other one is no. Let's remember that the Iranian oil industry is one of the oldest in the world.
Okay.
It is definitely the oldest in the Middle East. The infrastructure is crumbling because of sanctions and because of corruption. And it's only natural to see these things happening on daily or weekly basis.
Those poor people.
Okay, and this point is important too, because if oil prices keep increasing, we are going to see similar problems in many countries, that including Venezuela, including Nigeria, including Libya, because the infrastructure is too old. And if you try to bump more and put more pressure, you are going to end up with those explosions and those fires.
Okay,
and
we have a few.
bullish.
Yeah. Okay, so we have a few minutes here, Anas. Why don't you try and wrap it?
So the final point that I would like to talk about is consumer reaction to high gasoline prices. We have evidence from 2007 when the national average reached $4, and that's back to your point about high gasoline prices. We've seen with $4 gasoline that the public ridership was at record high.
Yeah, they don't care right now after being in jail. Yeah.
Carpooling basically was at record high. And the question is, now after COVID, if gasoline prices go to $4, will we see the same trend? Or people are afraid and they will continue driving their own individual cars because of fear of COVID?
Oh,
and that's the question. And I will end with that.
Okay. What a great presentation. All right. Also, people for a while, restaurants, hotels, airfares, gasoline will, just because they're on parole and they've been freed for a while, won't be that price sensitive until they get their credit card bills in August and September. And then I think they'll pull in their horns. What do you think?
Well, that's a typical consumer behavior. But
but I mean, it's not typical because they haven't been able to do we haven't been able to do anything for years. So who cares what it costs? I just need to get out of town. I just want to take a ride cross country. I'm still going to buy a steak, even though 20% of the meat capacity production is not there, and it costs me more. For a while, people aren't going to care about prices. because
Correct,
of
but-
what they've
but-
experienced, but they
But we have a
will.
problem. We have a problem here, Dale. The problem is we have serious supply chain problems throughout the
Yeah.
world and in the US.
Yeah,
I ordered, because of the freeze in Texas, I have several bushes and trees and plants that died. I needed a replacement. I placed a
Yeah.
large order. Everything arrived dead because they were late 7 days. And that's US mail.
sitting, oh, okay, not sitting on a ship, that's just a mail.
Okay.
Okay.
I mean, on the
All right,
ship,
well,
I know people who bought furniture and they've been waiting for months and they have not received it yet.
well, welcome to the new normal, Anas, and thank you for giving us some ideas for what we could expect and maybe some potential ideas to make a few chips here and there.
Absolutely,
You're
absolutely.
the best in the oil, bro.
Thank you, I really
And
appreciate it.
our audience really appreciates when you're here. So
I'm always honored to be on your show.
okay, thank you so much, Anas El Haji, and you could find him on Twitter at that name. Anywhere else people could find you, Anas?
Well, Twitter is the best. I do have my own website with my own name, Anas Al Haji.
Okay.
Some of the old articles are there.
Okay, my trading warrior brother, Anas El Haji. Thank you, buddy.
Thank you. Bye.
Bye-bye. All right, and I'll see everyone tomorrow. And we'll wrap the week on the NFP Trade It Live with us. Shalom, Amira. Hope I got your questions in. Don't forget to join the team in 14 minutes for the morning edge. Get your bias chart and consider becoming part of our community. And that's a wrap. Remember, don't just count your pips, count your blessings. Adios, everyone. You're welcome, Tom. Shalom, Amira. You're welcome, Jorge.